Let's talk about another stock that is trending here this morning. Warner Brothers Discovery shares, they are falling after reporting earnings and revenue that missed expectations in the first quarter. They did, though, see growth in their streaming business. This comes after announcing a new bundle with Disney, which will offer their streaming services Disney Plus, Hulu, and Max at a price that's yet to be disclosed. Yahoo Finance's Alexandra Canal has the details on that for us. Allie.
Hi, Shauna. Yeah, the bundle was talked about quite a bit on the earnings call, which just wrapped up. Management saying there are clear business benefits to this. That includes driving incremental subscriber growth. And since consumers will have to retain all three of those services, Disney Plus, Hulu, and Max, WBD said it expects the product will increase retention and lower churn and help support lifetime value of the consumer in addition to increasing marketing efficiencies. And this comes as we've seen bundles gain more and more traction over the past year or so as media giants really attempt to not only lure subscribers to their service, but retain those subs. The bundle will go live this summer. As you mentioned, we do not know a price yet, but management did say on the call that it will be based on the current price of Max. Now, Max is one of the more expensive streaming services on the market, with the ad-supported tier costing $9.99 and the lowest priced ad-free version coming in at $15.99. But this announcement does come as we saw streaming momentum in the quarter. The Max streaming service adding 2 million subscribers ahead of estimates. The direct-to-consumer division also profitable, with management saying that it expects to remain profitable throughout 2024. But of course, not all positive moments in this report. We saw a miss on both the top and bottom lines. Linear networks continue to struggle. Network advertising tumbling 11% year over year in the quarter.
You know, it's really interesting, Allie, and I keep thinking back to one of the stats that jumped out from that Deloitte Digital Media Trend survey that you and I have talked about, that we've discussed here at length, with 36% of Americans believing they're not getting the bang for their buck on SVOD, streaming video on demand here. So how is bundling, how is making sure that they're even going after specific titles or rights to broadcast certain sports even, how is that going to change the value proposition for a lot of these companies here?
Well, it gives consumers more choice. And at the end of the day, the idea that you have more choice as a consumer, that's going to be a net benefit moving forward. Also, when you think about content, sports in particular, the stickiness of content is important. You want to have people continuously coming back. Sports is one piece of content that you can't necessarily watch later. It's something that's on demand viewing. You need to watch at that time, which is why the NBA rights are so important for a company like Warner Brothers Discovery. They did mention that on the call. He wouldn't elaborate where talks currently stand today, but CEO David Zaslav said that he's hopeful they will find a deal that is fair for both sides and that they have the ability to match third-party offers. The Wall Street Journal reporting that NBC Universal is giving Warner Brothers Discovery a run for their money, literally, when it comes to these NBA rights. So we'll see where that develops.
More sports documentaries. I mean, it's a big time, winning time all over again here in New York City right now with the Pacers versus the Knicks. Of course, the Knicks are up right now in that series. Anyway, that neither here nor there.
Still sour about that.
Well, slightly. You know, somebody's got to be, and it's me.